Here, welcome back to another market close live stream. We've got some shifts happening here. We've got a little bit of uncertainty coming back into the market. Certainly, it doesn't help what's happening in Afghanistan, which is a complete disaster and a disgrace. I made a very detailed video about my perspective on what's happening and how I think things are going to get a lot worse over the next 6 months. But anyway, you could watch that video separately. Right now, we must focus on stocks. And this uncertainty spike that we have that is coming out of particularly hawkish Fed comments this morning from a couple members, either non-voting or voting members of the Federal Reserve, suggesting that maybe we can get this taper started at the very next meeting. This is something we knew anyway. I think, though, it just created a little bit of uncertainty again to where folks are like, oh, well, we could just wait around for Jerome Powell's Jackson Hole meeting, tomorrow. Well, and the meeting starts today, and it lasts until Saturday, the Jackson Hole Symposium. But Jerome Powell will be speaking virtually tomorrow, which, of course, we'll cover. But this Fed concern, along with what's happening in Afghanistan, is creating a little bit of tension in the market. We're seeing volatility up. We're seeing every single index down right now. You've got more pain coming to stocks that have been receiving some pain, which Nordstrom is really the one I'm referring to here. So Nordstrom continuing to suffer here. You have the volatility index spiked substantially, and we'll look at the indices in just a moment. But you also see this almost hitting the foot, hitting your foot on the brakes okay. Oh, I see. Okay. Anyway, it's almost like tapping the foot on the brakes here for risk. So we're seeing this sharper decline here in AMC of about 8%. Very Good Food Company dropping another 7.5%. Tattooed Chef 5.35 to the downside. So a little bit of that euphoria has at the moment been stripped from the market. I really do believe a lot of this has to do with, again, Afghanistan and the Federal Reserve. These two things combined are making traders just sort of take their bets off the table for right now. It's kind of like when maybe you don't, but I do. Sometimes when you're playing at a casino or whatever, and you're playing the roulette wheel or blackjack or whatever, sometimes the table just goes cold. It's like, we're done with this table, and it's kind of like, I'm going to take my chips and I'm just going to sit here and wait or look for a different table, right? I feel as though that is what we're seeing here in the market, is sort of that withdrawal right now. And that's why we're seeing specifically momentum movers like SPACs, Robinhood, AMC selling off. The Nordstrom and Macy's punishment, look, I think it's crazy how well Macy's has done. I'm shocked. I'm not invested in any of the retailers. I did not think that these Macy's numbers would last. We're seeing some red now, and I don't want to, just complain about Macy's while it's red. But to me, this is too much. Today's really its first red day in a while. I think it's this stock has almost been just like straight up since the pandemic. And I don't know if their numbers are going to continue to stay this good. We'll see what happens in the Christmas season. But otherwise, you've also got crypto slipping. Doge under 27 cents. Cardano at 251. It actually looks like we are trading at roughly the lows of the day right now. We're within about an hour of the lows of the day here. We've got 2.47 as a low on Cardano. Somewhat trying to move up right now in just the last 5-minute chart here, but otherwise, all cryptos here on this downtrend down to 47,000. Let's see here. We've got over here Lordstown Motors. Had a larger spike at the beginning of the day. I kind of mentioned that. That's interesting. It's kind of like right up at that resistance line. I mentioned earlier today that I was concerned, for me, I wouldn't buy Lordstown just because a new CEO is put in place, because I said it's possible the CEO is just going to go in there and go, oh my gosh, what the F is this? This is a disaster, right? That was a concern that I had. And so it turns out Lordstown Motors released the statement or the CEO did, shortly after it was announced that he was involved. And it essentially said the CEO and the company will do everything that they need to do to raise cash, aka they need more debt, or they're going to sell off some shares, or issue some new shares, right? I would not be shocked that on a day it's up 17%. This company tomorrow, it's Friday, ends up saying, hey, we're raising $100 million. Sorry. And we're issuing, X many thousand new shares. And then obviously the stock will tumble. But no guarantees. I'm not trying to encourage anyone to sell it, but I would that would be in the back of my mind as something that's more likely than not to happen. So if you're trading Ride, I would pay attention to that. Watching my debate got you pumped for politics? Cast your ballot. But I don't know if you could be pumped about politics. It's nasty. Be pumped about voting. That is a good thing. All right, so we got Etsy up 5.19%, Build-A-Bear up 3.5%. Woo. Palantir up 2.38%. eBay, Pinterest. Let's see here, a couple percent on these guys. It doesn't really surprise me that Palantir's up a little bit. If anything, I feel like Palantir should be up even more because I'm sure, I shouldn't even say I'm sure, I know our military uses Palantir, especially for intelligence gathering. And that's what we need right now. There's a whole lot of intel. It's just a mess out there in Afghanistan. So sad. But anyway, yeah, Palantir, I could see those kinds of contracts getting renewed and up. And it takes time for them to build out these intel systems. But I don't see Palantir not having solid contracts with the government, anytime soon. So I'm bullish on Palantir, especially with this whole ISIS threat. Algorithms, neural nets are so much more efficient at finding correlations in data than we as humans are. And I'm actually really excited about that. Woo. Yeah. All right. So then in the middle, we kind of have everything else. Let's see here. Yeah, Redfin continues to go down. It's like 2 and a bit percent. It's crazy. As Lucid imploded. Yeah, my gosh. I watched the debate last night. Seems like you caught 3 bodies. Oh no. Jeff Weibo, what's up, man? Jeff Weibo says, thank you for the Afghanistan video. Great insight. RIP to the service members and citizens. Appalling. It's so sad. It's so sad. And shout out to you, man, Jeff. I know you were out there. So sad. Yeah, it's heartbreaking. But okay, let's. We've got about 2 minutes here to the closing bell. So let's see what rates are doing right now in oil. Let's see rates right now. Or rather, oil right now 67.84. It's actually gone up a little bit. And hey, so is the 10-year. Why is this uncharted? 1.34 right now. Yeah, we've got a nice little tick up here. Going right, and this makes sense that leading into Jerome Powell's talk, we would see a little bit of a spike here. This means that Michael Burry short is doing nicely right now. He expects this 10-year to go back to like 1.8, somewhere around there. It's at 1.34 right now. Let's go get the cover of Bloomberg. Let's see here. Okay. Biden to speak about deadly. Yeah, so I will probably stream this. So this will be at 2 p.m. He's usually late, like very late usually. So it probably honestly end up being like 2:30 or something like that. But let me take a peek here. Let me see, because I've got a few interviews. I got a 1:30, which is fine, but I have a 2:30. No, it's going to suck. I might have to do a summary after. All right. Oh, well. U.S. stocks fall on Kabul blast. Oh, they're actually pointing to Afghanistan for why stocks fall. Excuse me. I mean, I guess I did too. I said the Fed uncertainty for tomorrow, comments from the Fed this morning, and Afghanistan. So I guess that makes sense. Prognosis, 100,000 more COVID deaths expected unless the U.S. changes its ways. Yikes.
The list, Salesforce is the big winner off earnings. Only sector higher in the S&P 500 right now is real estate, just barely. Energy is the biggest decliner, consumer discretionary under pressure. This is the first decline for the Dow in 5 days, first decline for the S&P and the Nasdaq in 6 days.
Here we go.
Putting up record highs, and also to show you how strong of a week it's been. Even with the losses, the Nasdaq is still on track for its best week in 5 weeks because it has been a strong one, but not so much today. Lower close off a lower day and an overall kind of dreary mood off the news in Afghanistan, David.
Yeah, well, you heard it there. Of course, that was the closing bell. Welcome to the closing bell as well. I'm David Faber, in for Wilkie Frost, and of course, I'm here along with Sarah Eisen and Mike Santoli, CNBC's senior markets commentator. Sarah just mentioned, let's take a look at how we closed here.
We did this again at the top of the hour.
Yeah, I know. You just did it. We do it again. All right. Well, things can change ever so slightly. As you see, the Dow was down by almost 200 points there. S&P and Nasdaq, for their part, not much better. In fact, the Nasdaq did end up being the worst performer of the three, at least thus far. As we mentioned, Williams-Sonoma has been one of the biggest winners on Wall Street today. This after it beat earnings estimates.
All right, we're going to go ahead and pull down here. We have Peloton reporting today. So Peloton earnings are expected within the next 5 minutes. Let's go ahead and have this ready here. Peloton. All right. So, okay. We have Peloton. We have Gap and Dell today. Gap, another retail. So that could be another tell for companies like Nordstrom or the other. Someone says they sold all their stocks yesterday. Well, there you go. Yeah, time to sell puts, right? All right, so we've got Gap. We have Peloton. Peloton's going to be a big one. I'm not particularly bullish, but I hate timing earnings because anytime I've said that, well, not anytime, but and Bill.com, I didn't know they were public. I'm going to look at that. I would expect that they're doing pretty decently. I wonder what their market cap is. But my expectations sometimes can flip on their heads. I just think Peloton's going to have seen a big slowdown. Bill.com stock. Let's see what the market cap is on this thing. Bill.com has a market cap of $18 billion. Oh, my goodness. Jeez. Yeah, that's incredible. That's big. All right, so I've got the terminal up. And let's go ahead and see what happens here as we go into earnings. We've got Bill.com up, we have Dell up, we have Gap up, and we have Peloton up. All right, so we're on standby for these. And then what we'll do is we'll look at the chart as well, just to see how things have sort of developed and moved in the last few minutes here after hours. Okay, 1 second here. Let's go ahead and listen in.
Here. I think that at the end of the day, it is really difficult right now to make a coherent argument.
Okay, Peloton's out. Peloton cuts price of original bike by $400 across the board. Hold on. We have... Okay. Peloton revenue comes in slight beat. $936.9 million versus $929 expected. Peloton identifies material weakness in internal controls. Oh my God, that's horrible. That does not sound good. Material means bad or big. Weakness in internal controls would mean like in their accounting. That's not good. Peloton sees Q1 revenue of $800 million. The estimate was $1 billion. That's a miss on revenue. This does not read good. So it's a tiny beat on revenue. It's a miss on forecast, and then talk about weakness in internal controls. This is very bad. Dropping the price by $400. Weakness identified won't result in restatements. Expects to return to profit or expects profitability in 2023. Oh yeah, there you go. Peloton 60. Yep. That's why I closed my options. I mean, I wouldn't sell like after this kind of the plummet's already kind of in there, like wait for the dust to settle. But yeah, no, I closed my options on this puppy. I was too nervous. But which remember, anytime you want buy sell alerts, join the Stocks and Psychology of Money group. But the stuff you're seeing just on website analytic data, not so wonderful right now for Piton. And but this talk about weakness in internal controls, material weakness, very, very bad. That is not what you want to see. So not a surprise here. It's down about 11% right now, not down at the lows, but it's definitely getting smacked. So yeah, no, those are terrifying words for a stock. No kidding. Citing internal control weakness. Yeah, I don't know what's up with that. That is, I want to read the letter on that because that's like kooky. I bet you here now they probably have Piton. Oh no, they're talking about housing. Let's hear it.
Because it was a rough Q4 for Peloton, which reported a loss of $1.05 per share versus estimates of a 45-cent loss. Revenues beat at $937 million versus estimates of $927 million. Q4 ending connected fitness subscriptions grew 114% to over 2.33 million, which was above estimates, but paid digital subscriptions were below estimates at 874,000. Gross margins were far short of expectations, 27% versus estimates of 35%, and that's significantly lower when compared to Q3's gross margin of 35%. Margins were hit by the recall, price cuts, as well as supply chain and freight costs. Peloton announced today it's dropping the price of its basic bike model from $1,895 to $1,495. Also,
yikes.
From the Consumer Product Safety Commission, Peloton said it will begin selling its tread in the U.S. on Monday and resume sales in the U.K. and Canada. Q1 guidance not good. Revenue, connected fitness subscriptions, and gross margins all below estimates. But full year guidance of $5.4 billion is slightly above estimates of $5.27 billion. While
yeah, it's just all bad. It's like a sink of bad news. Look at this. As you will see in our upcoming annual report, in the course of our 2021 audit process, a material weakness was identified in our internal controls over financial reporting with respect to identification and valuation of inventory. Okay. This was a result of discovering an immaterial discrepancy in our year-end physical inventory counts. It did not result in a material misstatement of our financial statements or disclosures, nor will it result in any restatements of historical results. We are committed to remediating the issues as soon as possible. I mean, that doesn't sound horrible. Basically, what they're saying is whatever process they have screwed up in terms of how they value inventory because they're doing the counts wrong. But I don't know. Maybe they double counted or something like that. But yeah, look, coming in to say that you're going to drop the price, your margins are going down, and you guys are screwing up in how you're counting inventory, all bad. All bad. Sorry. It's just not good. That's not good. Okay, Dave & Buster's down again 3.2%. Yikes. Okay, let me see. What else we have? Did we get another earnings report here? Oh, wait, I think we did with at least CNBC's. Oh, CNBC is going to do Workday. Okay, I didn't pull up Workday.
To the estimates, but the earnings here, this is a big beat. $1.24 versus the 78 cents estimated earnings per share that's adjusted. The other thing is this company says, look, this was one of our best quarters in the company's history. They're taking advantage of the digital expansion around the globe and talking about the fact that they now have 55 million subscribers, half of Fortune 500 companies, and now they're raising margin guidance to 21%. You can see the stock jumping there 3 1/3%. I'll keep my eye on it, Sarah. As will we. Contessa, thank you very much. And don't miss Jim Cramer's exclusive interview with Workday CEO tonight on Mad Money. Just want to come back to Peloton for a moment because we are seeing some pretty steep declines there, Greg. Wondering if you had any thoughts on the numbers.
Yeah, and on top of this, Fed Kaplan just came out and said the asset purchasing has served its purpose.
Yeah, I actually think that the key data point was the decrease in pricing on the bikes. Look, this is positioned as a growth story. They're putting up a triple digit, both subscription and connected fitness. But once you start to reduce pricing on the bikes, Now we have doubt as to whether this is a growth story with legs. Anecdotally, it was easy to say that this was the ultimate stay-at-home story, but they were adding content to keep users engaged, and they were entering new markets. And I think all of that gave the bulls hope. But again, that hope starts to crack. The very foundation of that hope starts to crack if you are purchasing the growth by decreasing the pricing on the units. And so I think that that's what the market is primarily worried about in the price drop.
Should mention as well, there is in the release here an internal controls update. Now, it's not material, but they do say in their upcoming annual report, Form 10K, in the course of their audit for 2021, a material weakness was identified in their internal controls over financial reporting with respect to identification and valuation of inventory. Again, it was a result of discovering an immaterial discrepancy in their year-end physical inventory count. So it didn't result, Sarah, in any material misstatement, but it is something else that can unnerve people on occasion as well.
Down 13.5% or so. Mike, did you want to weigh in on Peloton, just the share price performance and where the street is, basically?
In the meantime, we kind of already covered all that. But in the meantime, Bill.com came in with revenue of $78.3 billion. I'm sorry, million, not million. $78.3 million. That's a lot. 62.8 was the estimate, came in at 78.3. So it's a really good beat on the revenue. Loss per share did come in at 7 cents versus 4 cents expected, but that growth story is pushing, looks like it's pushing the stock up here in after hours, about 4 to 5%. Okay. Let's look at, so that's Bill. Now we did Peloton. There's Gap and Dell. Dell's late. Gap's not that particular. Well, Gap's in a few minutes. Let's keep listening here for a moment.
HPQ, and Josh Lifton has the numbers for us. Josh.
So, David, HP is reporting Q3 results here. EPS of $1. That's versus expectations of 84 cents. Revenue, $15.3 billion. The street was closer to $15.9 billion. For Q4, they're guiding for between 84 and 90 cents. The street was at 81 cents there. For the year, they do raise their target. Now they're looking for between 369 and 375. For segments, personal systems, PCs, 10.4 billion, and also looking for 10.9 billion there. And printing, 4.9 billion versus expectations of 5.1 billion. I did have the chance to speak with CEO Enrique Lores. I asked about that PC market.
All right, we don't care so much here about HP right now. Waiting for Gap. Want to look at those retail numbers. Gap, Macy's, Nordstrom's. Those two have been getting beat up a little bit here. Gap could help slow their decline here, or help push them down further. So we'll see what happens here. Peloton obviously just getting destroyed. But hey, we made our money on that one. Let's go to, let's see, Gap. Pull it up. Jeez. There we go. Okay, Gap down currently 1% in the after hours. Waiting for this to come out. Go ahead and keep listening here. A quick note, it's worth mentioning you can get a free stock worth up to $70 with public.com. Link down below, right next to the link for the courses, expiring August 31st, or price expiring August 31st. But anyway, go to metkevin.com/public. Link down below to get up to $70 in a free stock, totally for free. metkevin.com/public.
I am not surprised in the least in terms of PCs. I mean, that was the concern. That's the reason the stock is off 17% from its highs, right? We knew that we were going to see decelerating PCs because of the shipments and shortages. We knew printers had a challenge because slower back to work, right? So I think if this were to pull back materially, it's certainly worth a look. They've been executing and doing the very best they can in a very challenging environment. And PCs are not going away, nor are printers.
HP down almost 2% after hours, recovering a little bit.
I don't know about
I'll
printers.
Give you the final word on the conversation.
Really don't know about printers not going away.
That inflation is going to be a bigger problem. Sounds like them that the Fed has been talking about, and that they're going to have to ultimately respond to it. Think that they should be tapering. So what does that mean in terms of what your portfolio looks like and where you want to be right now?
Look, I think we hit on this at the top of the hour or before that when we had the conversation about retail. I'm looking for things that are somewhat immune to the pricing pressures. I'm looking for things that can pass on pricing So when we talked about those retailers a little bit earlier, I totally agreed. You know, I'm not looking at the Dollar Trees. I'm looking at the Walmarts and the Targets, still in that value segment, but able to pass on pricing and able, if we do retreat to more stay at home than we anticipated, are well positioned for that given their investments. And so, you know, right now I'm going to hide out in things that are safe, things where we know what the business model looks like. Lots of things in big tech, some of which we're talking about today, like Workday, are 20+% growth stories, multi-year growth stories that I think are underappreciated right now in their valuation, not necessarily subject to the wage pressures that we're seeing in the mid to low end. And so you want to insulate yourself from all of those acute pressure points and find stories that are insulated and offer you a growth story, a multi-year growth story, multi-year growth catalyst that you can pinpoint.
You sell that fund. Nail it. So like it just literally just sounds like a big sales pitch on the fund. My goodness. Multi-year growth strategy. 20% this. My gosh. All right. Oh, Gap came in. Great. Same store sales up 3%. Gap raises outlook for sales, operating margin, EPS. EPS comes in at 70 cents versus 46 cents expected. That's a beat of 24 cents on EPS. That's very good. Sees fiscal year revenue way higher. So it's raising forecasts. It beat the estimate of EPS. Its sales, don't see the comparison of sales yet, but so far EPS and forecast way up. So really good job for a Gap. And sure enough, you got that nice Gap pop here. Gap up 3.61%. Yeah, now about 4.3%. Still running. Piton settling at around down 11%. But yeah, Gap making a nice move here. That's good for retail, especially Nordstrom and Macy's. Like I said, people are still interested in buying. I just wonder how long that'll last. But we do know that travel is slowing down. So we'll see how these two balance out. All right, folks. Well, check out that free stock link down below. metkevin.com/public. Check out the programs, metkevin.com/join, and use that 40% off coupon code Jack's birthday. And folks, we'll see you in the next one. Joe Biden will be talking in probably about an hour, and see what happens. Yes, I saw the Hill's latest video, by the way, with the holes. Yeah, I know. It's crazy. Anyway, thanks, folks.